Colin, what is your take on Africa right now, and maybe you can tell us about some recent transactions you've been working on?
Okay, I'm pleased you've changed the question, because the first question you asked me was definitely a trick one. The combination of IPO and small and micro enterprise in the same sentence, and then adding in the World Bank was too much for my mind. But it leads to the same conversation, which is, I think it's actually pretty dynamic what's going on in sub-Saharan Africa, outside of South Africa. I would say, from a Goldman Sachs perspective, sub-Saharan Africa, excluding South Africa, is going to contribute to our revenues in a real way this year, in ways that it hasn't in previous years. We've done a variety of bond transactions. We did the First Bank Nigeria, Zenith, and Access Bank bonds. This year we advised IHS on the purchase of MTN Nigeria Towers. We're advising several private equity funds on exiting portfolios in some quite meaningful transactions outside of South Africa. And the combination of this tells you what's happening on the ground. What's happening on the ground, I think, is that the private equity community, and I know it has its frustrations, for those who are putting capital to work, it probably doesn't go as fast as they'd like. But the fact is that the more the private equity community, the investing community, I see Chris Dirksen from Investec Asset Management here, for example, the more that multinational companies like GE and others get involved in the continent, the more that there's effectively going to be transaction flow. And that is certainly true. I think the first wave of investing is probably the private equity community, and that's why you're seeing a lot of the Helios Actises of the world, who are early to the game, ECPs and so on and so forth, getting into transactions, getting out of transactions, which also raises the IPO point, which is right now you've got primarily strategics as the sort of exit mechanism for transactions, whereas actually what you want is you want much more capital market opportunity and optionality. So when you mentioned the IPO environment, I went immediately in my mind to Angola, because, and I don't know, is there anybody from Angola in the audience? Maybe not. But I was in Angola last week talking with the central bank and others, and they were telling me how they're getting ready for capital market issuance probably in the course of 2015, but very much focusing in the first instance getting the regulatory and the institutional capacity in place, and then starting off focusing on the debt capital markets less than the equity capital markets, and getting that sort of trading confidence going. And I was encouraging them, because if you look at the Goldman Sachs history in China, for example, we helped to create the Chinese capital markets, and they issued probably $120 billion through the state-owned enterprise privatizations in the last 30 years. And if you think about a place like Angola, you think about Unitel, you think about Sonangol, you think about Endiama, many companies that are effectively private companies that are substantial, that Angolan citizens cannot access directly, that institutional investors cannot access, and the promise of those sorts of companies at some point being on the capital markets would be very differentiating for a place like Angola. You would suddenly be able to trade, you would be able to see their quarterly performances, they would be much more transparent, there would be a lot more focus on the governance, and it qualitatively improve the environment for people to actually participate, both for locals and for internationals. So I think that is a, let's say, epochal challenge. It's, if it's not the next 5 years, it must be the next 10. If it's not the next 10, it should be the next 20. So in the human history landscape, that's a short-term horizon. In the short-term horizon, we should be seeing much more capital markets creation. The fact is South Africa still is the only place where there's liquid capital markets on the continent. And so if you wanted to trade, you have to trade in and out of the JSE by and large, and until those capital markets become more liquid. Look at Nigeria. Nigeria trades effectively $20 million a day. The JSE trades $2 billion a day, and it has a market cap of 80 billion the Johannesburg Stock Exchange is approaching $800 billion market cap. So that is a big change that has to take place. The sovereign wealth funds, the private equity players, the multinational companies, all getting much more robustly involved is a fantastic early sign of those pressures building, because over time, the logical thing is the people in the countries where these businesses are being built are going to want to participate. It's a bit like, MTN has the pressure to bring indigenous people into MTN Nigeria, and so they have that localization program, but it's very liquid. It's sort of, it's not really satisfactory over the long term, either to MTN or to the local population. So you'll have to see those sorts of things develop over time. So I think it's quite exciting, but I must say it feels to me like Africa is neither sort of the famine and dust bowl of old that we sort of saw in the time and the media, nor is it the China absolutely going to happen, 20 years on. It's somewhere in the middle. There's this hybrid sort of contestation for what Africa is going to become, but it's very exciting to be part of it.
Thank you very much, Colin.
Doing business in Africa. You can't afford to be without Africa Investor.